Welcome to the Acquisition IQ podcast. My name is Nathan. I'll be your host today. We are joined with Amy Johnson. This is quite a bio. I can't wait to read this out. Amy Johnson is the co founder and partner at Y Street Capital, a Utah based development and investment firm specializing in land, multifamily, self storage, and mixed use real estate projects across 9 different states. With a portfolio spanning hundreds of acres and millions in capital deployed, Amy is known for her expertise in entitlement, capital structuring, and market driven strategy. A former school teacher turned investor, she brings both grit and grace to the world of real estate, mentoring emerging leaders, especially women, in building lasting wealth through smart investing. Thank you for joining us here on the Acquisition IQ podcast.
Yeah, thanks for having me. I'm excited.
It's interesting. Many people they go through the ups and downs and career changes, and I want us to start back when you were a school teacher, and then also share with us some ambitions that you may have had, and then how now are you investing in real estate?
Yeah, so if you asked me if I am here today when I was a school teacher, I would have said no way.
Yeah.
So it's not, I would love to credit myself saying I had this vision for myself way back then. But taking one step back further, I actually grew up in a trailer. So I did not come with strong financial foundations like as from my
Hmm.
childhood to start. Grew up very poor, worked really hard, and just learned how to bootstrap. So originally, my message was to me was go get a degree and get a stable career, and that'll set you free. So I did that. I went and got my degree. I became a school teacher, and it was interesting. I was looking back at my paperwork just this year of like past stuff that I was throwing away, and I remember being how ecstatic I was that I got this half year. I graduated half into December, and I got this half year teaching gig, and um, I looked at the salary then, and it was $13,000
Hmm.
for that half year, and I was ecstatic about it. I was so excited, and that I got this real job for it, and so, um, but what happened was is I did everything everyone told me I needed to do to feel
Hmm.
successful. My husband went through school as well and got student loans as well, and I remember there was a time I had finished teaching. I'm opening up my newspaper, I mean, my mail in there. I'm sitting we had a small little 3 bedroom house downtown Rose Park area that we paid 125,000 for, and I'm pregnant, and I'm just like thinking about the future, and I'm opening up this student loan payment and thinking, oh my gosh, this is crippling. How are we ever going to make this payment? If we're doing what we're doing, what we were told to do, we're never going to get out of this for it. What should we do? And then that I remember the color of the wall. It was just
Mm.
like a pivotal moment for me. And that's when I said, we've got to do something unconventional. Even if it means we may fall back to where we are today,
Hmm.
that's okay. We've got to do something different. And so then that was the catalyst in starting to research and figuring out how do we get into what else can we do besides just working an hourly job
Hmm.
to get there.
I think it's important to identify the understandings of our mindset during those difficult times. And how would you define both your mindset when you were currently living maybe below or under your means, and then also how has it shifted, and what was it like going out and making that transition? Because there's a pivotal moment, like you just said, and you've got to have a pretty rock solid mindset.
Yeah, so I think our growing joke as between my husband and we just said, "Hey, we're living below our means right now. So why not just let's try the crazy thing. Let's try the crazy risks of out of our comfort zone. And in the absolute worst case scenario, um because when we were buying houses, we had started really buying houses during the crash. And we're like, hey, we see other people that are 50, 40. and they have lost a lot of stuff.
Mm-hmm.
So we're young right now. We're in our 20s. So we're like, hey, what? So what? If we do this and we fail, other people have failed at older ages than us. We still have this incredible time to mess up. And
Mm-hmm.
so because of that, because of the age of the gift of age of time, that's where I feel like our mindset was like, we're okay to feel aggressive
Mm-hmm.
and run with these things, even though our family outside and other people were saying, you're crazy, I can't believe it, that's not safe.
Well, the
But
one thing I look at is it's either so if you're in a position where you feel stuck, but yet it's the same cycle over and over again, and there's no vision for a greater future, that's probably how you felt, seeing opening up that student loan and just saying like, well, there's nothing additional that has been added to increase our overall quality of life, and we're only in this cycle. It's the same. So why not try something else here to where even if we're at low, we know that we have a vision that's greater than, you know what I mean?
right. And it was
Yeah.
all outside. So it's not like we burned all the boats,
Yeah.
right? We both still had our jobs and everything else. And we just said, okay, we have our jobs here. We're going to keep those. What can we add? What can we
Yeah.
add to this to put more gasoline to burn these student loans down
Yeah.
for it? And
That's
that's
good.
when we got into real estate back then. And we said, okay, we took our cute little home that we just redid the floors, and we
Mhm.
just we had curated this little unique space for
Yes.
us. And we took that home and we decided to rent that home out to renters. And then we had, in the meantime, before that, we had saved up enough money by window washing. We sold everything. We went down to one car. My husband rode his bike to work. Like, that's what we did to make this dramatic change for it. And we said, okay, we're going to put a renter in this house, and then we'll use a FHA mortgage to be able to buy this really crappy, stinky,
Mhm.
disgusting dump of a house that we bought that was somewhat down the street from us. And we bought it for 105,000, and it was disgusting. And it was a little bit hard to
Mhm.
move from this
Yeah.
cute, nice, redone house to this pile,
Yes. But it's
But
so interesting because obviously you're not there now, but it's like when you look back at the sacrifices that had to have been made, you know what I mean, to create this lifestyle that is completely different from your past.
yeah.
And, for those of you out there that are listening, at times it does take the extreme sacrifice in order because what do they say? It's like they say if you do the same thing over and over again, you're gonna get the same results, right? And that's why there has to be this extreme change. And sometimes it's those that come in from the outside of your life to really shake up, and then sometimes it's an internal, because there's internal drivers and external circumstances. But so share with us more. Okay, so you're now you've got two houses, and you started to understand a little bit more about real estate. So for those out there that maybe are in this position and they're looking to make a big shift, what's the first thing that they would do in order to start getting into the real estate industry?
Yeah, and so I would say, so the market has shifted a little bit. You
Mm-hmm.
can back then we could buy a house for 105,000,
Mm-hmm.
right, and move into it. Right now, the single family housing is not as affordable as it was back then for us. So that's definitely a step up for us. However, what I tell individuals is I say, look, just work on you can do two methods. There's the house hacking method where you buy a house and maybe it has a rental capability and you have the renters help pay for
Mm-hmm.
that. Take a step. Don't be afraid to take a step down in a house. I've helped individuals sell a nice pretty house, and then they've bought a smaller house, or they've bought two houses
Okay.
with their equity there. But that's also like they're in real estate. They already have a house, right? To start. I've also had people say, okay, you can buy with the FHA mortgage, you can buy a fourplex and put it in there. But the one important part that I did not know and nobody taught me back then is I didn't realize how I can, with as small as $50,000 down, I can get into larger commercial real estate and be what's called an LP, so a limited partner. So that
Mhm.
means somebody else is qualifying for the loan, somebody else is managing the entire deal. But this LP, I can come in as an LP and I can be an owner in storage units,
Mhm.
small bay industrial, like these different opportunities that I would have never known how to do or any of that. But I wasn't taught that
Yeah.
back then. But I just was like, oh, okay, here's maybe a rental that I could do.
Yeah.
And so if that's an interest to you, start Googling or figuring out that part and looking, or I'm happy to,
Yeah.
I'm all maybe being a teacher in the past, I'm like a teacher at heart. So
Yeah.
I love to teach people how to take part in those
Yeah.
opportunities
Well,
for
let's
it.
let's uncover that a little bit more, okay? So, for example, if you buy one house, you buy it for $50,000 down, and then you rent it out. Your monthly, say on a $1,500 home, and then you rent it out for two K. That's $500 a month, right? But let's kind of go the other route where you're an LP. You put 50,000 into a storage unit. Is What's the distribution that comes from that? And then is it monthly? Is it bi-monthly?
Yeah.
Or quarterly?
Yeah.
What does that look like?
So, and it's important to compare apples to apples. Well,
Mhm.
first of all, the 1,500 in the state of Utah is not really attainable right now.
Yeah.
So you'd have to
Yeah.
go Midwest to figure that out, right?
Mhm.
To find it. Um, and so just understand that you're
Mhm.
already going out of state or somewhere else to go find a single family home that would work in those numbers. But for a storage unit, yes, it's usually done on a quarterly basis, is how things are paid out. And
Mhm.
think of it more about an 8% pref,
Mhm.
meaning most of these deals have an 8% pref, but means like a preferred return, meaning the investors get paid first before anybody else, and they get 8%
Okay.
paid out to them on their money. And then most of the deals overall, like we don't work on our project. Our projects that we try to obtain are more of like a 20%, 25%
Mhm.
IRR. So that means like over the time life of the your money is into the project, I'll make a 20% return on my
Okay.
money for it. So that's what a IRR looks at. And then like at least a 2x multiplier. So if those are new terms that you're
Mhm.
hearing, you're like, I don't know what those terms mean. It means that what if I'm going to 2x my money
Yes.
that I put into it. And so we've taken it as a foundation for Jared and I when we were growing. We said, okay, this is our nest egg.
Mhm.
Every time we get a payout from a thing, we're going to continue to roll our nest egg over and
Reinvest,
over,
reinvest. Now,
reinvest.
when you said 2 times your money, so for those of you out there, again, let's create that scenario. You invested 50K inside of this storage unit. And then from there, what is the definition of the time frame that you would 2x your money?
Yeah, so not just it, every deal is dependent. So
Okay.
most of the deals, I would say, if anybody is selling you a super quick, get fast,
Yeah. Get
it's
rich fast.
yeah, whatever. Put up your red flags of a
Yes.
warning. Okay, so real estate is slow and steady, but it does well, and so I would say 3 to 5 years that
Mhm.
you would plan on. Just you will know going into the deal what they plan for their exit strategy and everything
Mhm.
else. But if you're 2 times in your money, it'll be happening 3 to 5 years of when the project is exited out for it.
That's good to know.
Otherwise they say up front it's an 18-month hold or whatever, then they say, but that's definitely an outliner. Most of the investment deals that people are going into are 3 to 5 years.
That's good. And I think
So,
it's really important to properly set expectations too. And, again, this is no investment advice, and, percentages do range upon every project. And it's at the disclosure of the investment docs that must be, disclosed
yeah.
properly throughout that. But again, I love that scenario though. And I like the mindset. And I think it's important to understand that there are different investors out there. Have you guys gone into, or you personally, have you done, high risk, mid risk, and low risk, or how, because again, this is all about acquisitions and about strategically creating alt investment opportunities, and then also looking at business acquisitions, which we'll get into and what you guys are doing too as a roll up strategy. But what is one of your thesis? And do you have a portfolio now of various companies?
Yeah, so
Hmm.
we do exactly that. We
Hmm.
we divide it up into high, low, medium risk
Okay.
inside of it. And we're not all super high, we're not all really really low. It also, I would say, as far as when you're looking at your own portfolio, we always say we have to find a product that fits for you. Even if
Mm,
it was, we kind of related to like a shoe. Like even if it was the most gorgeous shoes you could ever find
yeah.
in the market, that's like look beautiful and whatever, the right price and the brand or whatever. But if those shoes don't fit you, it, they're worthless for you. They're not
Yeah.
going to do you any good. So, what are your goals
So
that
many
you're
stories about that.
what are your goals? Because I have individuals that are like, "Hey, I've sold my companies, but I need cash flow. I don't need the equity multiplier to be as high."
Hmm.
So that's a different. We're gonna direct him to a different type of product. And then I've had other ladies say, "Hey, I have a high W-2 paying job, so I don't need the cash flow. All I'm working on is multiplying my nest egg. So what's a somewhat safe area that I can have a higher growth that I'm not getting any cash flow?" And so those are two different, very different asset types. For example, the high multiplier is usually a land development play
Yep.
that will go up high, where land development does not give any cash flow usually, right, associated with it, unless you
It's
can
a
have a
it's a hold play
yeah.
upon exit.
Exactly. And
Yeah, that's good.
so there's that option. And then versus, for example, the storage units, maybe it's an existing storage unit or our small bay industrial flex, just constant tenants that are
Hmm.
just renting out, they get cash flow, here you go. So,
That's so good. Um, yeah, I was. Let's go into that. Because now we have both real estate as an alternative investment. Because I'd like to get your understanding and then also maybe just your take on investing on placing capital in the bank, for an interest return as
mm,
opposed to the placement of your capital in other areas. Because I've spoken to people that are fiduciary responsibility. They have a fiduciary responsibility to people that just give these financial advisors their money. Nothing wrong with that, right? But it's just, I feel like it's a different conversation because there's the private market that's being developed by all, even yourself, right? Like you have multiple investments and you have also investments available for others to be able to earn off of their investment. So what's your opinion on or in the take of placement of capital and alternative markets as well as just like your regular financial advisor,
yeah. I've always struggled with on so I work with financial advisors on
Mhm.
some point, but I'm always very upfront in figuring out what's what's their alliance or they're obviously making a living off selling a certain product
Yeah.
or those things. And so the reality is in this world there's a million ways to make money
Mhm.
for it. So I don't want to say one way is bad and
Mhm.
one way doesn't work for other people. Um, Goes back to what fits for you and if you're comfortable with that. And then do you really understand the one part I would make sure is, one, do you really understand what's happening with your money and where it's being used? Or is your money just going into another fund for other people to make more money off of you for your funds for
Yes.
it? So that's important to understand for it. So there's lots of different, and I'm not going to debate on what's there, what's not. I will say, I mean, we utilize banks as a source of leverage for
Mhm.
capital, right? We have accounts for all of our things, and there's our sleep well account for it,
Mhm.
right, in our banks. When it comes, I never think of my bank as an investment thing of a
Mm-hmm.
money market account or whatever, and I'm getting 3% of my money
Mm-hmm.
because that's not even beating inflation.
Yeah, that's good.
So there's that. Now we have, and it's not so much this last year, but last year, we've had us and other individuals looking into like we would invest some money into T-bills or like very, very, very conservative items that were there, but it's because they were paying 8-9% for
Mm-hmm.
a T-bill bond. So, um, but the only other part I would say is going back to the can you really explain it? Because
Mm-hmm.
some people, we've done this terrible disservice, I think, in the past as kids, or maybe it was just my generation growing up. We didn't talk about money. We didn't talk about vehicles. We didn't talk about like vehicles to put your money into,
Yeah,
right?
yeah.
And so we came into the world a little bit with like just this somewhat ignorance
Mm-hmm.
coming in. And so then you get us in some factors superior, I don't know what the word is, but
Superiority.
a superiority person
Mm-hmm.
of the speaking fancy words.
Mm-hmm.
And you come in and you say, I don't know what I'm doing.
Yes.
I maybe I'll just trust the expert completely, but I have no idea what I'm doing whatsoever. Um, those situations, other people, I have came across other people when I said, "Hey, did they teach you what was happening there?" And they're like, "No, they just said it was right.
Like, I'll do it.
They'll
Yeah.
do it." And so I just did it.
Mm.
Versus, "Hey, let me make sure you're going against somebody that is a teacher that you can say, "Hey, teach me. I don't need to know all the ins and outs.
Mm-hmm.
Like I don't need to know how to handle the software for the storage units or whatever, but teach me the basics of what's actually happening here so that I can be more informed."
Yeah.
And so if you have somebody, whatever vehicle you're going into for investing, make sure that they can help you with that.
Yeah. And it's almost that if somebody were to say that, you'd still go with them, and give
Yeah.
them the business, but you
Yeah.
would be then better informed. But then you could also do comparables. It's like shopping for a house, right? And then you do comparables in the different neighborhoods, and then you're just more informed, right? And I think
Exactly.
education is one of the most important things. Um, what are some areas that you've gotten the education that you now have? Obviously there was a gap between when you were younger to where you are now. Has it been through groups, or has it been through books or YouTube? Like what's your source of information?
Yeah, all of the
Hmm.
above.
Hmm.
So I'm a crazy fanatic for business books and learning from other people. Somebody said the best, most expensive, I mean, the cheapest mentor you could ever get is getting a $10 book, right?
Yeah,
That you can buy because they put their heart and soul into all of that. But all of those things, I have paid for coaches. I even have a business coach as we speak right now that we're working with. Um, we we work with other people. We read books, podcasts. Um, Also, just going through it. So, for example, before I bring other people or friends around into an asset or a new asset class that I want to, I myself usually become an LP first. Like, for example, the
that's
storage
good.
units, I was an LP first. So we started into storage units and going into the larger thing. I was an investor first, as just putting my money in. I was not the know how do it all
That's good.
person. And then I figured it and said, okay, what do I like? Don't I like about this process? And and then I learned enough about everything. And I'm not a one woman show. I've
Hmm.
brought on the experts,
Yes, that's
which
good.
is critical for it. And if you're only tied to one person, it's almost a red flag,
Yeah.
right? So you need to have other experts around you that they are very knowledgeable about that asset class. So I have a storage guy, I have an iOS guy, like we have the individual people that
Hmm.
that's all they do, that they're very professional at it. So became an LP first, practice, worked through it, figured out what I didn't like, what I do like, how I want to be communicated to, um, and learn those things first
That's
before
good.
I ran into
Yeah, I know. Some people just they talk a lot, and then all of a sudden when you get money on the table, it's interesting how people's topics or their whole thought changes, their actions change. And but it's cool when you invest yourself, then it really makes you've got skin in the game, as we all know. And then now you're in this process of educating yourself, because why would you want to lose your money on
Exactly.
an investment?
Yeah, and so when
That's good.
and it helps, if I'm going into a project, I want to know, I want to say, "Hey, guess what? Part of my nest egg that I worked really hard for, I'm putting that into this deal because
Mhm.
that's why I love this deal." And I don't do any deals that I don't ever invest in a deal for myself or work on it as a GP if I don't love the deal myself
Mm.
for it. So,
What type of deals do you look at, and then also how do you find a good deal?
well, that's like in its own podcast, I feel by itself. But
It is,
networking.
but I think this would be, because I know that we talked prior, just to systems and of course, networking, like you saying. So, but yeah,
Yeah,
what are
yeah.
your
So
thoughts?
I would say finding the right deal. It's about networking and lots of conversations
Hmm.
for it, and putting it out there that what you are looking for.
Yes,
Because then now the universe says, "Oh, okay, they're looking for this," and if I didn't put it out, nobody would know about it.
true.
So don't keep it a secret. Say, "Hey, this is what I'm looking for, and this is what we're trying to obtain. For these are our goals." Put those out publicly. I know sometimes those can be a little bit scary to
Yeah,
say, like, you get some naysayers, but I would strongly recommend that. So, lots of networking, lots of that. And then the other part is, and one thing that would contribute some of our success is that we take care of those people that bring us the deals. We ask them up front. We say, "Do
hmm
you want to be part of the deal?
hmm
Do you want a fee for the deal?" Like,
that's good.
we're never just going to be like, "Okay, you found a deal. There's no way you'll be able to close this, so we'll close it and just take it from you." And in the commercial world, it's very that happens. We'll just say that. Let's say that that happens a lot. So we make sure to take care of, we
That's
call
good.
them our bird dogs, or those guys that bring us those deals. We say, "Hey, yeah, do you want to be part of this?"
That's good.
And a lot of times they don't even understand what that means. But then again, goes back to teaching. Say, "Hey, let me show you the difference,
Yeah.
and let me teach you the two options, so then you can decide which one
I
to
think
go
that's
with."
extremely important, just to welcome and also to continue to give back, because I think you're creating an ecosystem that does give back to itself. I mean, I know, even with the acquisition IQ network, and as we continue to build out the network, I was just thinking right before you came in here, I was like, those that invest into the network, it invests right back into you. It's this
Mm-hmm.
constant, perpetual cycle. And you've created a flywheel, it seems, because it's, hey, what did you provide? How can we provide back to you? So I think that's an area that, like you said, so many people maybe they overlook the long term value of that, as opposed to just the short term value that they may get from the deal.
Yeah,
You
and
know?
actually, it is always interesting that you get a lot of people that do say, "I just want a fee,"
Yeah.
and then you're like, "Okay, here you go," and then I think sometimes they kick themselves and be like, "Oh shoot,"
Yeah, there probably should have been an equity play
like,
there, yeah,
yeah,
for a
maybe I
long
should
term
have,
hold, yeah.
yeah,
Well, and I
but
think that's also up to you two, or up to whoever is running, the project. I think that it's good. What I'm saying is it's good to have that perspective that you have, right? Like, still having a servant heart, but yet knowing that there's a bottom line to be had. You know what I mean? And then you have a giving spirit that is able to say, hey, listen, we're here for you, but because you were here for us. I
yeah.
like that. We talked a lot about real estate, and now I'd love to learn a little bit more about some of the strategies that you're implementing, because real estate is, in essence, like a business acquisition too, because you have online real estate, you have now in person real estate. What are some of your goals as an investor? And do you have more of now a portfolio mindset to make acquisitions, to expand a portfolio?
Yeah, I would say the next 5 years that we're planning on now. So we've done an outstanding job the last 10 years in building our real estate. And inside that real estate, one of our top avatars that we work with are business owners, especially
Hmm.
business owners that sell their companies. And then and they invest those into these long-term hold cash paying assets that they don't have to be and they can just retire and be good, right? And I work with a lot of general contractors and other people like that. They invest into our deals. So because of that, and we're making this large push in small bay industrial as well. And so we're talking a lot of business owners there. So as we're speaking to all these different business owners, the epiphany that I was working with and working on, and that's why I joined your network with
Hmm.
everything, is I said, okay, I'm seeing these business owners, and I remember last year there was 3 that I had passed on, and these were like the typical. These are baby boomers. Their kids don't want to take their business, and they are actually just letting them die,
Yeah.
basically. And I'm like, oh, those were some good resources with everything. Um, why couldn't we circle those around,
Hmm.
and have somebody? Are you sure? I'd ask them. I'm like, are you sure you don't have any? They were selling some of their like real estate or their business or their trucks, and then they're investing that into my stuff. And I said, are you sure you don't have anybody that you could sell those to? And anyway, so now that's been our next part, and I'm working on creating. I'm a big fan of creating the right team.
Hmm.
I'm working on creating a right team of basically these Avengers of
Hmm.
business buying, that we can go through. We're in an acquisition as we speak that should be finalized by the end of this month.
Hmm.
But I mean, end of this year. Sorry. Um, and it's that typical avatar. It's We're talking about these individuals have been, that the senior person of that is 70
Hmm.
and he wants to retire. He doesn't need money up front. He's like, just give me a monthly payment. We put a very small amount down. Each partner put $15,000 down to buy,
Hmm.
and they do over $1 million in revenue
Hmm.
for it. So it's pretty exciting.
Hmm.
And the more I'm talking to other individuals, I'm finding other opportunities like that. And so that's our next phase of where we're working. It goes back to This goes back to when I was talking in real estate that I don't bring on anybody else, and I only use my own money until I know I'm like sure and excited about what I'm doing. Because people have said like, "Oh, could we put money into you
Yeah.
purchasing?" And I said, "Well, I'm testing it first, So I'm putting our own money in to fund and go through and create, and then the goal is in 5 years that company will either be sold
Hmm.
out or at least repositioned, that we'll pull some of our capital out and keep growing it depending,
Hmm.
for it. But we'd love to um, purchase other this specific company that we're working on has some vertical integration with what
Yes.
I'm doing with my other stuff, right? And so the other companies that I'd be looking at it would be nice. It doesn't have to, but it would be nice if they integrated somehow
Hmm.
into what we do. But because we do a lot,
Yes.
there's a lot. I mean, especially in the trades environment of building 100,000 square feet of stuff. There's a lot of trades that we talk with. So, um,
True.
there,
Electric, plumbing,
electric,
concrete,
plumbing, concrete, all of those
excavation,
excavation. I would
architect.
say, and I guess I'll practice what I preach
Yeah.
there. The excavation one is one we're looking
Yeah.
heavily for right now. Is one of ours because
Okay.
our iOS product, it's industrial outdoor storage, that's our largest component. Is the
Yeah.
dirt work.
I know we had spoke offline here. It's about 5 million was the goal.
Yeah.
Yeah, 5 million 8 square feet. I was gonna say acres.
Oh,
That's a lot, but
yeah, yeah,
5 million square feet.
yeah.
Okay. Well, obviously there's so much there. I mean, you've got. Let's uncover just a little bit more actually with
Okay.
that. So you went into this business. Okay. So for the scenario for those out there, we're gonna go into this scenario where I'm at the table, you're at the table. I'm the gentleman that you were looking at acquiring this business from. what did that conversation go like? Was it, how did you structure the terms of the term sheet? And then what kind of questions did you ask? Basically, create that scenario.
Yeah. So this one, it goes back to this specific piece.
Mm-hmm.
I mentioned to one of my funding partners or one of my partners that I'm on a couple other deals with, I said, hey, look, I'm looking at acquiring, and it first actually came from an investment banker. We were diligencing a different company that was done in Michigan that was the same trade for it. And they had a higher valuation, and we were looking into theirs, and it was okay, but it wasn't like awesome. But then this one that we were looking at acquiring, and I'll just say it was a $3.5 million
Yes.
to acquire it. And it still was good, but it was in multiple states away.
Okay.
And so I wasn't sure if I wanted my first one to be multiple states
Outside of the state, yeah.
And so, okay, we had that one. I told it to my partner, talks about, sharing your goals and saying, hey, I'm looking at acquiring this. I know you do a lot of land development and you could benefit off of this as well. Would you be interested in going together on this deal? And
Yes.
we looked into it and he's like, I'm just not in love with this. However, I use this other company and they mentioned that they're tired.
Tired.
And that was the word that was,
Tired.
That started the conversation. Okay. They said that he's tired for it. And so we went into it and we sat around the conference table. We had some things. We had shot back and forth about 4 different LOIs. And we realized we weren't getting quite we were thinking a little too business.
Okay.
And we weren't getting quite to the heart of things.
That's good. That's good wisdom right there.
Yeah.
Yeah.
So when we got in person, we started talking. We said, "What's really important to you? Like tell us, and then just sit back and listen, and hear what's important to them." It wasn't about the dollar figure that his company sold for. It was about the monthly payment that he was going to be getting for the
consistency.
The consistency
and
part.
stability, because he had grown accustomed to the stability, and probably a little bit of the pride that he still has as like an owner or a creator of something, right?
Yeah.
That's interesting, and it's really wise that you said that, because I've had conversations with others on this podcast, and they're very, it's a private equity buyout, like, or not just on the podcast, but in general, it's very bullet pointed numbers, like if it works, it works. If it doesn't, we're out.
And that's where we
There's
started.
Like hundreds of other businesses just
Yeah.
like yours.
Yeah. And that's where we started.
That's good.
The other part that I realized, and we pointed out too, is that his business was not a very sellable business in some, like from a private equity standpoint.
True.
There was a little bit of messiness associated with it. And so we said, look, we're willing to work through this mess
with you, basically, yeah.
If you will work with us on terms.
That's good.
And everything else.
Now, did you structure it to where the individual has, other than the payout, is there any equity play, or hold
0.
or anything? Okay, good.
No,
So,
0 equity play. There was one other
cash
partner that's younger than him that he's like, I still have 20 more years of work that I still want to work on. And honestly, we're grateful that he wants to stay on. And so for him, it was like we were negotiating with 3 different separate, because they're all different owners. Everybody has their own goals of what they're working for.
Yeah.
So those needed different conversations. So we had one conversation with this key individual that was completely leaving, and then a whole different conversation with the individual saying that staying and trying to explain him our vision of where, like, yes, you are. And he was actually going to be coming down on ownership technically, but it's because we're putting so much into the company.
Yeah. So there's equity that's being placed, and there's equity that's there, and then, then you also need to look at the long term the long-term development of the company, and then also the, obviously the operations inside of it. And it's probably why just being able to attract talent and then keep talent, uh, within the company. But again, he didn't need to be attracted per se. Just he needed to know the vision
Exactly.
of this joint venture in essence, because you got one company and two companies creating a new vision. That's exactly what you've done, is you've been able to pull two parties together and then share kind of a different, more advanced vision. And
Yeah.
then also being able to, and this is what I would say too, if you're at the negotiation table with somebody, is to see what their vision is too, because they have significant input.
Mhm.
Like that gentleman, if he's going to stay on, just ask him, what do
Yeah.
you want to see? Where
Exactly.
do you want it? Where do you want this to go?
Yeah,
You know,
and then the other part to that is like, who do you need to really propel you forward
hmm
too from a team standpoint?
that's good.
Like, what other staff do you need? What tasks are you doing right now that are not up to your hourly wage, or
Yeah, that's good.
what is there? And like one example that's kind of silly, but they're like, oh, well, our front end person, she left at COVID and worked from home, and she's been working from home since. And it's kind of worked out. She handles like our books and
hmm
that stuff. But she would also hand. So anytime somebody comes into the office, I have to leave my office and go and help them to come in. And we're like,
Hold up.
hold on.
Yeah, yeah.
Like
That's a disruption.
that's a
That's a system
disruption. And
disruption.
this is like our senior engineer, right?
Yeah.
Like, you shouldn't be answering to sign for a FedEx packet.
Yeah, that's good.
Like, there's no way.
Well, and that's so true. Well, we thoroughly enjoyed this podcast. You know what I mean? I think you're an inspiration to me as well, honestly, because going from where you were and where you are now is this world of difference. And I'd ask, and I want to ask you to leave us out there with some one words of wisdom, and then also, well, yeah, just how you've been able to go from where you were and now you are today, and maybe some inspiration.
Yeah.
Yeah.
If I was to put it to one word,
Yeah.
I would say action.
Okay.
So often, and I tell this to women all the time, especially because I think we want to be very comfortable, and we gather a lot of information
hmm
to make sure we fully understand before we act. Versus, and I'm in most of my fields that I'm in are most predominantly male, so
Yes.
I like see the difference for it. And so then you see some males and they're like, I have no idea what I'm doing whatsoever. And I'm just we'll figure it out on our way down.
Yes.
We'll figure it out. And, and really, when I look back at when I've had the most success, it's because I was doing some constant action every single day for it to move the needle forward. And you know what? Sometimes my actions made us take a step back, but still the momentum of the action still kept propelling us forward, even though it was more of like a push pull type
Yep.
of generation there. Um, so I mean, I've screwed up
Yes.
some things. I've had some fails. There was before, you remember I said I try everything out first. We tried out one asset class and we failed at it, and that took us like a year of progression
Okay.
back. So start with some action, whether that's what are you missing? Do you need a mentor? Do you need a coach? Do you need a deal? Do you need money? Like, figure out what you're missing and then tell the world what you're missing so
Get
that you
after it.
can get after it.
That's so wise. Well, guys, this has been the Acquisition IQ podcast. We're joined here with Amy Johnson. She's the co-founder of Y Street Capital. She's been investing. She's been growing. Used to be a school teacher, and what a great interview. This is, again, very inspiring to me to take action, and we want to challenge you guys to take action out there as well. There's many things that you probably have, dreams, goals, aspirations. You want to buy that business. You want to sell that business. You don't want to grow your business. There's a lot of things out there, and the world is abundant. That is 100% correct. We do have a lot of abundance coming up here at AquaCon on September 3rd. That's where our national conference will be here in Salt Lake City. It'll be a full day summit. We'll have a VIP dinner a little bit later that night, and we will have people flying in from all over. We've got a guest speaker, Jamie Miller. He is a negotiation expert. We'll have Paul Hickey. He'll be speaking about taking your company IPO versus using venture capital to do so. We'll also have a good friend of mine, Adam Campbell. He'll be speaking about how to structure your investment fund in a very strategic way, as well as to attract capital. And also a good friend of mine who's talking about tax mitigation strategies and how to structure your company from a legal standpoint, how important that will be. So, again, thank you so much for joining us on the podcast, and we hope to see you in Salt Lake City on September 3rd. And thank you again for joining us today.
Yeah, absolutely. It was a pleasure. I can't wait for the conference. I
Yeah,
got so much value last time.
it should be
Sure.
good. And if you guys like today's episode, feel free to like this, comment below as well what you guys would like to see first or more of, and then also share it with your friends. And until next time, we'll see you soon.